April 2025. A line has been crossed, not by tanks or treaties, but by tariffs. In just 1 week, the world's two largest economies reignited a trade battle with stakes far beyond just exports and imports. Is this the start of a new era in global trade, or the unraveling of decades of globalization? It began on April 4th. China's State Council Tariff Commission dropped a bombshell, a sweeping 34% tariff on all U.S. goods entering the country, no exceptions. Just days later, the U.S. hit back hard. President Trump, invoking Executive Order 14257, raised U.S. tariffs on Chinese imports to 84%. Even low-value shipments, once seen as minor transactions, were swept up in the tariff surge. The message from Washington was loud and clear. If China wants to play hardball, so can we. The numbers tell the story. Take a $100 camera lens imported from China. With the new tariffs, that same part now costs over $210. SMEs, small and medium-sized businesses, are already feeling the squeeze. Retailers, auto manufacturers, medical device makers, no sector is immune. And yes, consumers will pay the price, too. But China's not exactly celebrating either. American agricultural exports, soybeans, corn, beef, face new hurdles entering Chinese markets. Supply chains are snarling. Investors are jittery. And Chinese tech firms that rely on U.S. components? They're bracing for production delays and rising costs. This isn't just a U.S.-China showdown. European firms that assemble products using Chinese parts for the American market? They're caught in the crossfire. Vietnam, India, and Mexico, once seen as winners in the decoupling trend, are now wondering, can we really absorb this shift at scale? Emerging economies in Africa and Latin America? They're facing diverted trade flows, unstable prices, and restricted access to key markets. Some see opportunity. Vietnam could benefit as companies look to shift manufacturing out of China. India's Make in India campaign gets a boost. Mexico's proximity to the U.S. makes it a compelling alternative for nearshoring. But these transitions aren't simple. Infrastructure, labor costs, and regulatory environments are massive variables. The WTO is watching nervously. Multilateral trade rules are being bypassed like outdated road signs. Economic nationalism is making a comeback, with real consequences. Inflation may rise globally. Alliances could shift. Countries are reevaluating their trade ties with urgency, and others may follow suit. The EU, already navigating tensions over digital services and carbon tariffs, might raise its own walls. India could escalate import duties, and nationalist movements in South America and Africa might seize the moment to call for more protectionist policies. The big questions now: will China back down or double down? Can the U.S. economy absorb the hit in the name of long-term leverage? And how will voters react if inflation spikes and shelves start to look emptier? In boardrooms and backrooms, the diplomacy has begun. But for millions of businesses, workers, and consumers, this is no waiting game. The effects are already real. Tariffs used to be tools of trade. Now they're weapons of geopolitical strategy. And in this new battlefield, everyone from Beijing to Berlin, from Iowa to Shenzhen, is a participant. Whether this marks the beginning of a new world order or a dangerous step backwards depends on what comes next. One thing is certain: the era of quiet trade is over. We've entered the new tariff front.